All right, welcome everyone to another episode of the Wall Street Down. I'm your co-host Billy. I got Wale with me. What's good, Wale?
What's good? How you doing?
Man, the stock market has been doing some crazy stuff yet again. The US tech market recap. Nasdaq went up like crazy. It's like nearly 1%, closing at a record high. S&P 500 also at 0.8%, closing just below its all-time high. So we didn't really go up there and hit it again. Dow Jones was up also 0.5%. I mean, this whole week, man, if you look at the whole week, like Nasdaq was like 3.9%, like the whole week. That's a crazy number. S&P was 2.4%, Dow Jones 1.3. Surprisingly, even though IWM or Russell 2000 is still kind of below the, it's still negative on the year, they were up 2.4% this week alone. So I mean, we see some crazy move out there. I mean, we talked a little bit about this too. Like, there's a lot of bullish momentum in the market. So even after last week's job report that kind of dropped the market a little bit, we shook that off and went right back up.
Yeah.
So some of the key drivers and market themes are the rate cut optimism and tech rally. So it's like we're looking at like a lot of those tech names. We look at Nvidia. You look at, I mean, Apple participated finally.
I got some things to say about Apple. We'll get there though.
Apple finally participated, man. So, bro, let's get your input on this week and this day. I mean, I don't know. Like, it's like I feel like market just keeps shaking all the negative news. It's like nobody really give a crap about the negative news. You know what I mean? You think this should be like the bottom's gonna fall off? Nope. The dip buyers keep coming still. That's been the theme for this year.
And the thing that's crazy is when I talk to, people that are more in tune to the technicals of what's going on into the markets, a lot of people are saying that what's driving the market is momentum and not necessarily fundamentals. And what they're saying is when momentum is the driver of the market, it's usually not sustainable. So we'll have to wait and see because long term, right? Everybody knows that um, earnings growth and those types of fundamental things are what drive stocks long term.
Right.
So right now it's just momentum. I keep hearing people saying that there are fund managers who are behind on getting in on this rally, and some of them are just chasing the momentum. So I I'm still a believer that as long as the technology sector continues to be the outperformer, I think there's still some other sectors out there that are still doing pretty good as well. I think that it can sustain, maybe not at the speed that it's going right now, but I still think that the growth is sustainable. There are other sectors and other stocks, man, that got slammed. Like if you look at Eli Lilly got hit pretty hard this week. I looked at the Trade Desk, they were down 37%. So there are pockets of the market that are not doing really good. But the thing is that if you look at the main drivers and the big, large cap companies and the technology innovators like the NVIDIA's, Microsoft, now Apple, right, is starting to get on board, Planeteer, those things continue to drive how the markets are moving. Now, these stocks aren't cheap, but what can you say at this moment? And there hasn't been any headline news that has really ruffled the feathers of the market. Like even after
Right.
we got all of these announcements about Trump's tariffs, you
Nobody
look at the
cared.
reaction. We look at the reaction we got now compared to what we got in April. They just like,
Nobody
yeah,
cared. Nobody
nobody
cared.
cares. And I think
It,
the market, has realized that it's just negotiating tactics.
yep. And it's like, and is it working? Is it not working? I mean, we really don't know. I mean, I feel like money is coming in from the tariffs and all this stuff.
Oh yeah, that's for
So
sure.
now where the money is going, is it gonna go back to the public? Is it gonna go to improve? Because you have money coming in, but then the debt ceiling is like the raise that damn thing. So it's like it's like it's kind of like you go and get a better job, but then you spend way more than what like so you're not really making any money. You know what I mean? It's like you keep upgrading your lifestyle every time you make a little bit of more money. So it's like you're not really have anything in savings and all that stuff.
Yeah, and the thing is, I'm trying to the increased revenue that's coming in, how much of a dent are they putting in on the deficit on a quarterly or annual basis?
I don't know.
Because my thing is, if you've increased revenue, but the hole that you've dug continues to get bigger, as you said before, right? What are you really doing at the end
Yeah,
of the day?
yeah,
So
yeah.
we'll just have to wait and see how things play out. But I mean, having the need to raise money, and somebody I was talking to a good friend of mine, shout out to Winston Hill again. He was saying that all of these countries are talking about their investing in the US. Maybe they're just committing to buying treasuries. And
Ooh,
Trump is taking it as an investment in the US.
ooh.
Because technically, right, if you're buying
They're
treasuries,
just
that's an
buying a
investment.
debt.
You're buying a debt.
Oh, yo.
Yeah,
That's like a light bulb. That's like a light bulb moment, man.
shout out to my boy Winston Hill
Because you're
for
absolutely
spotting
right.
that
Like
out.
you put in like 500 million, 500, like 100 billion or something that's like, what exactly are you investing in? Like, where's that money going? You know what I mean? And it's
So maybe
countries.
so maybe it's just a commitment to say, okay, we'll just buy your debt.
You know what?
Because you know the US needs the debt to keep the engine running.
You
Without
know
people
what?
committing to the debt, because remember when we saw
Yeah.
the fall off in treasury purchases in April, Scott Bessent had to tap Trump on the shoulder, like, hey, you
Yep.
gotta chill, bro.
Yep. Yep.
And that's when
Yep.
we got the 90-day pause.
Yep.
So maybe it's just a commitment to buy
Wow.
treasuries. It's not really an
Wow.
investment.
Investment.
Yeah,
Ooh.
shout out to Winston Hill, man, for spotting that out. And I was just like,
That's
that could
crazy.
be true.
Yeah, and we're not referring to companies, right? The companies are different. When a company
No,
commit to investment, they're actually building manufacturing and all this stuff. But we're talking about countries who are saying
countries.
we're invested in the U.S. and
And
yo,
maybe
that's
it's
crazy.
just buying a debt. And at that
That's
rate,
crazy.
that's not. I mean, is it an investment? Yes. Investing in bond is an investment,
Yep,
but maybe it's
yep,
just buying treasuries, and that's
yep.
like to me, that's nothing groundbreaking.
That's crazy, man. That's
Yeah.
crazy. And I feel like I feel like Trump administration is they're just trying to raise money out of everywhere. So I don't know if you heard about this. They're literally trying to take Fannie Mae and Freddie Mac public.
Public.
I was like, wait, the government can do that?
Hey,
Like,
we living in some wild times, bro.
this is some crazy. So who's gonna benefit from that money? Because if you guys think about it, Freddie Mac and Fannie Mae, they are mortgage companies, right? So like, I think mortgage company did they do this student loan too? I thought they do student loans.
Fannie Mae, I
That's student
think, is
loans,
student loans.
right?
Freddie Mac is mortgages.
Right. So it's like, so you have these companies who are already kind of like, bottom line predatory lending to students and all that stuff. And on top of that, it's like now you guys get to go in the market and raise more money for free, right? Like, like,
I mean, it's not free, but yeah, I get what you're saying.
but they're giving out shares to get more money to put in their pockets, and but who's going to benefit from that money? Because these are government agencies. This is not like your
So,
regular.
so here's the thing: do they lose their government agency status by going public or no?
I don't think so. I really think they're going to come up with a loophole because the government is the one trying to take it to the market.
Yeah, that's true.
You know
Huh?
what I mean? So,
Will the SEC allow it? That's the question.
man,
That's crazy.
yeah. And then the second thing is the 401k now being allowed to
Invest in private,
cryptocurrency and stuff,
yeah,
and
private markets and
private
crypto.
market too.
Yeah. I mean, to me, because I've worked in the 401k industry and have managed 401k for large institutions. And the biggest thing about that is disclosures. Because
Mm-hmm.
as an advisor, I'll be honest with you, you have to protect participants from themselves. That's the problem. You have to protect participants from themselves. Because when I sit down with the average person and I go over their investment like portfolio, when they give me how they come up with their investment decisions for the average person, a lot of them aren't really like educated and they're not putting in the effort to really understand what they're doing. They're looking at performance numbers and trying to find what's the best performing fund. That's the fund I'm going to be in, not necessarily knowing the risk or what it entails or what they're doing. or, oh, I'm looking for the safe investment.
Yeah.
Not necessarily understanding that, okay, you're in a 100% bond portfolio, you're 27 years old, you're probably not going to make it
That's
to retirement,
that's a
right?
turtle right there.
Exactly. So when I look at how people make decisions in these things, because that's the reason why mutual funds exist, and that's the reason why most there's laws where if you're in a 401k, right, you have to set up what's called a QDIA, which is a qualified default investment option, right? Where if you don't do anything and you enroll, it's just going to default you to something.
Yep.
A lot of plans, the default is going to be a target date fund that is basically managed to an asset allocation to where it's aggressive while you're young, and then it gets conservative as you get closer to your
Yep.
targeted retirement age. So it looks at your age and then it puts you into a target date fund. Because most people, if it was left to them, they wouldn't know what to do.
Right.
And that's
Right.
how target date funds became popular, is because it caters to the average investor who doesn't know what they're doing. Now, you start to implement private equity where you're talking about things like private credit that have like, no liquidity for like 5, 6, 7, 8, 9, 10 years, right? You
Hmm.
look at the yield, it's like, okay, you get a 12% yield, but this is not liquid. You're in this fund for X amount of years. You look at investing in private companies that are startups or venture projects that also don't have a lot of liquidity. So somebody might be going into their 401k trying to change their asset allocation because they're scared now, and then they figure out, oh, I'm in a fund where I can't get out.
Right.
You didn't tell me that. And then you go look at the disclosures and it has that option. That's why a lot of um, 401ks don't allow you to invest in individual stocks or individual ETFs
Right.
because they want to force you to be diversified.
Yep.
And in order to invest in those things, they have like a brokerage window, but you have to sign up, you have to sign disclosures where the employer is not liable if you mess up and make bad decisions.
Hmm.
And you have to pay a fee for that in some cases.
Yep. Yep.
So I'm a little bit worried because this is how I look at it. Take away forced savings and Social Security. How many people would be?
No. No.
A lot of people won't make it.
No. Nobody's thinking about investing. None of that stuff. No.
Correct. So
Nope.
Social Security is also saving people from themselves
Yep.
because it forces them to put money away
Yep.
that will eventually pay them at 62, 66, and 70 if they plan if when they plan to retire.
Yep.
So I'm a little bit worried, but the disclosures, if you have private investments in your 401k, you have to have disclosures out the yin yang, because I have hundreds of articles that I've looked at about employers that have been sued because of certain things that happen, either fees. And trust me, them private credit fees or those private investment fees are going to be high. They're going to be
I
north of 1%.
no. They coming for your money.
Yeah, they're going to be north of 1%. You're
Hmm.
not going to see any, maybe you will, but I'm telling you might even see 2%,
Yeah. Yeah.
because the private, like, especially if you're going to be investing in like a hedge fund, right?
Yeah. Yep.
So I'm a little bit scared about opening that can of worms. So, because if you're not educated, you're just going to be looking at performance and you're just going to be looking at a bunch of numbers and you're going to be like, oh, this looks good.
Yep. Yep. Now, is that going to allow people to invest in like individual stocks, or is it just like
So you
more?
can invest in individual stocks already now if your
Right.
401k administrator allows you to do that.
Yeah.
Like,
Right. But most of them are locked though. Like most of them are locked. You can't really. They only give you like a
no,
basket of.
no,
No,
mm-mm,
really.
no.
Okay.
So if your HR department has a 401k administrator, they can unlock what's called a brokerage window if the administrator allows that. So
Hmm.
that's like you're in the plan, but there's a window that's open to the stock market where you can
Okay.
correct.
Okay.
So a lot of what I have seen is when a lot of high earning jobs like law firms, doctor's office, dentist,
Hmm.
you know, people who want that type of stuff, they talk to their record keeper and say, we want a brokerage window as part of our 401k plan.
Gotcha.
But when you look at, you know, other types of plans like nonprofits, car dealerships, more of the like the blue collar work, a lot of them don't want to open that window because they are afraid of what it could do to the participant. Because that if you're a
Mm,
participant, right? And let's just say 10 years ago, I have a brokerage window and I go 100% Intel
mm-hmm.
or
Now you
100%.
lose. Now you're losing all. Yeah.
Now I'm down and I'm blaming my employer, like, you shouldn't have let me invest in this,
Yeah. 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 Yeah.
right? So some employers don't want that battle. Other employers will say, okay, we'll create the necessary disclosures. If people want to go to the brokerage window, this is, you have to sign off on it and you can do whatever the heck you want.
Right.
But that's why mutual funds are the standard. Is because if you make a mistake and you just invest in the S&P 500, right, or 60/40 portfolio, chances are you're going to be fine.
Yep. 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 It's definitely a
So
risk. It's definitely a risk if you
yeah,
take advantage of that.
there's a lot of risks to the employer if you open up that universe of investments where people can harm themselves.
Yep. Yep.
Yeah,
Yep.
that's the problem. Is that, like I said, let's just say you invested in 100% UNH because your friend told you to, or you invested in, what's another stock that's been down pretty big, Rivian, or
Or Nike or
or
Starbucks
Nike, right? Like you
or
open that door and
Target.
you right, and you're getting advice because as advisors, when people have their brokerage window and we do a one-on-one, and I see that you've got individual stocks, I can't give you advice.
Mm-mm.
Nope,
It's hard. Yeah.
I cannot give you advice because that
And
puts me at a liability
right.
where you're going to say, oh, Wale told me to, I had a 100% position in Nike. Wale told me to sell. And let's say, well, Nike goes up, or I had a 100% position in Intel, and then Intel was down 50%. We don't give advice if you in a brokerage window. That is called self-directed. And when I mean self-directed,
You it's the
my
self is
lips are
there.
sealed. Yourself is there. What I'll tell people at that stage is, do you understand what you're doing? What's your rationale behind your investment?
Yep.
At the end of the day, diversification is your friend. That's the end of the
Period.
conversation. And if they don't
Period.
want to
Yep.
diversify because they feel that they know what they're doing, hey, I'll leave it to them.
You're on your
Now,
own.
exactly. Now, you can have success. Like, let's say you were 100% Planeteer, 100% NVIDIA, right? You can have that type of success. But
Yep.
again, most people aren't going to do the research to,
To be able to
or
do that. Yeah.
exactly. Or let's say you were in the GME meme stock craze, right? And like all of those can of worms are open when you
You know
open that
people did that
window.
too. You know people did that. But
Yeah.
honestly, like how many people knew that? I knew that you can do that. Like I didn't know like you
It
do have
depends.
those
It
windows. You
depends
know what
on
I
your
mean?
plan. The
Right.
administrator is the one that makes the rules. Yeah,
Right.
it depends. So
That's a good.
a lot of Fidelity plans, Charles Schwab plans, JP Morgan plans. If that's your administrator or your record keeper, like
Mhm.
that's where you get your statements from. They have that feature, but your employer has to turn it on.
That's up to them. Okay.
They have to turn it
Gotcha.
on. Yeah. But a lot of employers don't want those can of worms. But
Hmm.
you know, some do because like if I'm a lawyer making $500,000, right? And I've been investing on my own for the last 20 years, I'm gonna
Yeah.
tell my employer, I'm gonna need to get in that Tesla stock. I'm
Yeah.
gonna need to
I'm
get an
gonna do my
Apple.
own thing. Yeah.
I want to do my own thing. And that's when they
Yep.
open that window. So
That is good to know, man. That is good to know. Now don't go out there turning that thing on and losing all your money.
yeah. Like I have a friend of mine, he works for a mortgage company. He says they don't have that option. They just have a menu of diversified
Yep.
mutual funds. They have
Yep.
a target date funds, and that's all they have. And again, to me, for the average investor,
That's a
that's
good way to
good
go.
because it protects them from themselves.
Yep.
Yeah.
Yep. Yep. Because we know we all there. You see all a bunch of money, then you start going crazy.
Yeah.
So we are
Exactly.
not everybody's immune from that.
Yeah.
But let's move on to Apple, man. I know you want to talk a little bit about Apple. Apple stock surged like almost 4.2% today at a close at 229. I mean, a couple of days we were talking about Apple just dropping. You know what I mean? So they announced a massive domestic investment plan. So this jump also significantly contributed to the Dow Jones 200. So Apple is one of the biggest position in the Dow Jones, and it added like crazy amount in there, right? So the catalyst, they're investing over $100 billion investment, and they're getting a tariff relief because we talked a little bit about this. Some companies who have existing manufacturing in the U.S. are exempt from that um, conductor semi tariff that Trump is basically enforcing on all the companies that do semi chips and all that stuff. So let's talk a little bit about that, man, because I don't know if this move from Apple is more like optimism
Hmm.
about this, or are they working on something? Because if it's based on optimism, we're gonna go right back down because there's no really tangible thing they're working right now. Like I keep saying it, unless they're working on stuff in secret, then they might have a reason. But as of now, I don't see anything. So go ahead.
Yeah, so the Apple move, I mean, we're talking about almost a man. They went from what, 200 to 231 in a
Yeah,
matter of 1, 2, 3 days.
quickly.
So the way I look at it is this. I think the biggest catalyst of why it made that move is because the numbers that they projected of how much the tariffs would hurt their business, maybe that's gone away now because they have now
Mm,
told Trump that they're committed to investing more in domestic production and investing in the United States. I think they've got some factory in Texas or
yep,
something, or
yep.
I don't know. But at the end of the day, just this is what I want you to understand about Trump. And he tends to talk big, but it never turns out to be um, the bark is more than the bite. So remember, he was talking about that he said that the only way Apple was going to get tariff relief is if they assemble their phones in the U.S.
Yeah.
It's like that's the only way. Here we are. We're not assembling phones in
We're
the
not selling
US.
nothing.
But now what do we get? Tariff relief.
Yep.
Now, here's another thing. Is Apple also committing to just buying treasuries? Is their investment just buying treasuries?
Giant treasuries. Yeah. Yeah.
Because corporations can buy treasuries too.
Mm-hmm.
So I don't really see any major groundbreaking shifts in their supply chain coming to the US. Maybe it's just buying more treasuries.
Yeah. Yeah.
I
I
don't
mean,
know.
it's saying that they committed $100 billion into U.S. manufacturing. Now, manufacturing of
We'll
what?
see. We'll see. We'll
Manufacturing
see.
of what? So,
Because I remember they made big promises back in 2016, 2017 about how much they were going to invest, and they never came close to that number.
mm-hmm.
So, maybe
Yep.
they fudging the numbers, and because Trump can't read an income
Hey.
statement, maybe he's just like, okay, cool,
Just give me the money.
just give me
Just
the
give me
money.
the money. That's
I don't
it.
know, but
That's it.
at the end of
But
the day, when it comes to the AI race, they are so behind that I am not. I don't see anything innovative. The only part of their business that's really grown is their services business. The services revenue is growing.
yeah.
Maybe that's something that they can hang their hat on and continue to grow with. But when it comes to AI, they've done absolutely nothing. People are saying they should buy Perplexity before their valuation
Mm.
gets too high. And when you look at Apple, Beats has been their biggest acquisition, which was what, 3 billion.
But they killed that thing. They didn't buy it because they wanted they bought
They
it
bought it
because they
because of
want
competition.
yeah, they wanted to
Yeah,
kill it. If you see that they haven't come up with anything beats.
yeah.
There has been no new
That that
beats product.
that's been a what? That's been a dud of an acquisition, if you ask me.
Mm-hmm.
I think they.
Because the point wasn't to grow that line. The point was
Hmm.
just to buy them, kill them, so that way they can compete with Apple. Because
Yeah,
yeah. But that's
like
crazy, man.
yeah. I have lost my not that I've lost faith in Apple. To me they're not innovative.
No, not anymore.
But maybe, like I said, if they buy Perplexity or they do something groundbreaking, I heard that maybe they're making some type of partnership with Google and Gemini. Maybe that helps them, but
Yeah.
I don't know.
No.
They're a hardware company that sells phones, and those phones are not innovative no more.
Not anymore. For a company that's a leader, that used to be considered a leader a few years ago, like
Yeah,
they need to do something quickly. Somebody said they might be turning to be in the next BlackBerry. I don't know. I
I
mean,
I think that's what Dan Ives said. Yeah,
yeah,
they have a BlackBerry type event down the
yep,
horizon if they're not if they're not
yep,
if they're not careful.
yep.
I heard that, and I looked at that, and I was like, BlackBerry kind of had the same
BlackBerry had the same trajectory. That
trajectory.
you guys probably don't remember BlackBerry, but about maybe like 15, is it 15 years ago? I don't know how long ago, but BlackBerry
I
used to be
know it was
used
right.
by
Yeah,
every
when I first got out
single
of college,
business. Yep.
I used to
Every
be
single
on.
business
I used to
person.
be on my BlackBerry out of when
Them
I first became a
keyboards.
financial advisor. Yeah, that was like the You had a
Yep.
BlackBerry with the keyboards, they knew you meant big business. They was like,
Yes.
yeah. So,
Yes.
and I remember being so stubborn to not transition to the iPhone.
Yep.
I was just like,
But
I'm not doing it. I'm not doing it. I'm
yeah.
not doing it. And then,
But once you move to the iPhone, nobody went back to Blackberries.
ooh. And BlackBerry now, even though they're still a publicly traded company, they just focus on software and security
Yeah. Yeah.
because the government used to be
Yep.
their
Yep.
biggest client when it
Yep.
came to software security.
Mm-hmm. Mm-hmm. Because they
Now,
were very, very strict. They were very
yeah,
strict, especially
yeah,
the government employee and stuff.
yep.
So,
So the government loved them. Now they
mhm.
are an afterthought.
Yep.
Yeah.
So again, you snooze, you lose real quick in this
Oh
in
yeah.
this type of market. You know what I mean?
Easy.
I feel like you take a sleep on the wheel,
You fall
somebody
asleep
else is
at the
gonna
wheel,
come and take it.
somebody else is coming behind you.
Somebody's coming to get it, man.
Somebody's coming behind you. Yeah.
Yeah.
So
But we wanted to introduce this new Financial Fridays to be able to break down some do we call it Financial Friday? I forgot what we call
yeah,
it.
Financial Friday.
Financial Friday. So it's a segment that while they kind of come up with, go ahead and tell the people what that segment is going to be about.
So every Friday, what we want to do is talk about a life financial topic, right? To talk about financial topics that affect people's lives. Because let's be honest, not everybody's a trader. Not everybody, looks at the stock market. But always, this has always been my thesis. Trading's not for everybody.
Yep.
Investing should be
Investing.
for everyone.
Facts.
Everyone should be investing in one way, shape, or form. So we're going to be taking topics. I'll probably ask a poll on online to kind of get what people want to talk about, as I've done with stocks, and then we'll go into that topic. So today's topic, I had a great one-on-one with somebody on Friday, no, Monday. A very long conversation,
Mm.
and one of the things that she asked me was, should I invest in my employer sponsored 401k plan, or should I just invest in an IRA? And there is no cookie cutter answer for that.
Mm-hmm.
The answer is going to be it depends. So I'm just going to go through a couple of things that you should think about before you decide to either go the IRA route or the 401k route. First, let me just, talk about a couple myths that I hear a lot of people talk about. People tell me, oh, my employer controls my 401k. And the answer to that is they do not control your 401k. As an administrator, your employer sets the parameters and the around how your 401k can be invested, right? If you don't do anything, most employers will default you into what I call a QDIA, qualified default investment option. That is what they will that's where you will default if you don't do anything. But as a participant, you have the opportunity to choose your own investments, right? Choose your own mutual funds, choose an index. What they don't want to give you a ton. People are like, oh, I'll only get 10 funds or 15 funds. What they are trying to protect you against is analysis paralysis, because there's studies that show that because you have more options, a lot of people, the more options they have, the less likely they're going to act. But if they limit the option, then they're possibly going to make a decision, right? They've done tons of studies around analysis paralysis where they say, okay, we're going to give people, 20 options versus, 10 options. And what's the difference? And what I've seen as a 401k advisor is the more you constrain the options in the plan, the higher the participation rate. A lot of plans that have like 20, 30 different funds, they have low participation rates because people look at them and they become paralyzed. They're overwhelmed. Which one do I choose? I don't know. So they don't do anything. They just default. So that is one of the reasons why you see some plans, they don't have many options. And at the end of the day, you don't really need that many options because granted, if you're in your 20s, right, and you are want to invest, you just invest in the S&P 500, chances are you're going to be good in 4 years. You don't need a ton of like small cap and big, you don't need a ton of options. You just need to be diversified over the course of your investment investing trajectory. Now, one thing to think about that I usually start with is, does your employer offer a match or not? That's where I would start. If they don't offer a match, then having a traditional IRA may seem more enticing because if they have a match, that's free money. Why wouldn't you take free money? So if your employer says, we're going to match you, I don't know, 5%, a dollar for dollar up to 5%, a dollar for dollar up to 6%. Your goal should be to get to that number at the very minimum because you don't want to leave money on the table because that's free money. And why do employers match? They want to attract talent. They want to attract good employees. A lot of employees, they'll look at their 401k benefits and say, okay, if I'm choosing between company A and company A offers a match, company B don't, they might go with company A. So if they offer a match, you should be investing in your 401k plan rather than doing an IRA. Now, if they don't have a match, the next thing I will say is, how much do you plan to invest over the course of the year? So your 401k is going to allow you to put away way more money, way more money. The contribution limit for people under 50 for the 401k is 23,000. The contribution limit for the IRA is 7,000. So if you're someone who has the ability or is in a high tax bracket, right? Because again, this is money that's going in pre-tax, which lowers your taxable income. If you're someone who has the ability to invest more than 7,000 per year, from a tax standpoint, your 401k is a better option because you're going to be able to deduct more from your income compared to the traditional IRA, which is only going to allow you to deduct 7,000. So let me give you an example. I am somebody who makes $100,000 a year. If I put in 10,000 into my 401k, I am only liable on paying taxes on 90,000, which lowers my taxable income, which is great. If I just use an IRA, I have to pay taxes on 93,000. So my taxable liability is a little bit higher. Now, it may not be a big difference between 10,000 and 7,000, but from a tax standpoint, to me, it matters. So if you're someone who can invest more than 7,000 per year, the 401k is a better option, even if there is no match, because it will lower your your tax liability more. Now, let's say you are someone who isn't able to do the entire, you know, you can't do more than 7,000. Then that's when I would say an IRA might be a better option because if you put 5,000 into the 401k, no match, and you put 5,000 into the IRA, no match, you're basically in the same ballpark. But the IRA obviously will give you more investment options. And then if you leave the employer, you don't have to worry about rolling the money over.
Mm-hmm.
So to me, the IRA makes sense if you're someone who isn't able to get to the now if it's 7,000, 7,000, same thing, right?
Yeah.
Or if it's like 7,500, 7,500, you see what I mean? But the
Yeah.
further the more you're able to put over that 7,000, the more you should be leaning towards the 401k. But if you're at the 7,000 or less, you should probably be leaning more towards a traditional IRA if
Yeah.
you're looking
Yeah.
to deduct to lower your taxable income. So that's the process I would go through to decide whether or not which one would be better or not. Some people will also say, should I be doing a Roth first or traditional IRA? We'll probably go into a little bit more detail around that later. But when you're younger, to me, when you're in a lower tax bracket, probably want to go with a Roth first because as your income increases over time and you're single, let's just say you're single, or if you're married, your income will determine whether or not you can invest in a Roth or not.
Or rather, yeah, exactly.
And if you're a high income earner, that window gets closed. So taking advantage of that when you're in a lower tax bracket and a lower income is probably a good idea to start. Now, there are Roth 401ks that will give you a after tax option with your employer plan, which is another way if you're a high income earner, you can, but not all 401ks offer Roth options. I think they're starting to introduce that more, but not all 401ks offer Roth options. So
Right.
we'll talk about that another day, but that's what I wanted to walk you through because that question does come up a lot. Yeah.
Yep.
And if you're
Yep.
a business owner, you might think that the only option you have is an IRA. you can actually open an individual 401k as a business owner so you can unlock that $23,000
Facts.
window. Because if I'm a barber, and I know some barbers that make really good money, opening an IRA is not, that 7,000 deduction doesn't really help you that much.
Right. Doesn't do a big dent.
Doesn't do. I know some real estate agents making like 200, $250,000 a year, and they're like, I can only put $7,000 in an IRA. I want to be able to put away more. I'm like, open up an individual 401k, because this is the beauty of it. You can put away 23,000 as the owner of the 401k, so as a participant, then you can put in additional money as the business for profit
On
sharing
top of that.
on top of that.
Oh.
So there's a calculation that you have to go through to decide how much more you can put away.
Yeah.
So if you're a business owner and you're like, man, this 7,000 is nothing. Like, I need to put away more money.
Mm-hmm.
Open up an individual 401k plan for your business, right? And that will help you so much from a tax perspective. If you do OnlyFans, same thing.
This dude.
If you do OnlyFans, if you're a content creator,
Oh man.
open up an individual 401k, because
Bro,
you're
you
gonna.
should you should you should hit up all the OnlyFans people.
I
Like, I'll
should.
manage
I
your
should.
portfolio for you.
I should. That might
'Cause
that
they,
might be
they
a
make a lot
business.
of money. They
That
make a
might
lot
be.
of money.
If you're a stripper, you can open up an individual 401k plan.
There
So
you
if you're
go.
a business, a one man business with less than, I think less than
Solopreneur,
two
yeah.
two or three employees, you can put away way more money than just putting money away in an IRA or a brokerage account where you don't get any tax benefits.
Right. But I think also is a mindset, right? It's like
Mindset, that's
you
true.
have to have the right mindset as a
You have to
business
have the
owner.
right
You have
money
to have
as
the
a
right
business owner.
mindset. You know what I mean? Because trying to get an employee to like, sometimes I run into people who don't even invest in their 401k in their company, and I was like,
Mm,
you're losing on a free money, yo. Like, they're literally matching you up to a specific point. Even if you just put the 6% or 3% or 4% or whatever it is, that just put
correct.
that in there,
Yeah, just put
and
it in there.
you're not gonna miss it. I
You won't
promise
miss
you,
it.
you're not gonna miss it.
I promise you. When I used to sit down with people, because one of the things we used to do, when we would do our education program, right? We would look at the list of people who are participating, and then we'll have a list of people who are not participating, and we'll reach out to the people who aren't participating, and I'll say, hey, you're not invested in the company 401k plan, right? And I just wanted to know, do you plan to work till you die?
Hmm.
And the answers that I will get is that a lot of people will say, well, my friend told me or someone told me not to do it. Or they'll say, I have Social Security.
Hmm.
And I'll be honest with you, living off Social Security for the rest of your life is not a good
That's
option.
not the goal. That's not the goal.
That's not a good option. A lot of people who do that regret it.
Yep.
I know it's there, but it's not something that you want to be 100% dependent on. You don't want that to be your only source of income,
Yep.
because it's fixed. Sometimes you don't get inflation adjustments, and unless you're living, especially if you're living in California, Social Security is not going to be enough.
Nope.
Especially if you're living in California, it will not be enough.
You better book a ticket and go
You
somewhere
better you
else.
better go move to like Montana, Idaho, or somewhere
I'm talking about out the
or
country.
out the country. Or yeah, that's true. Or out the country.
You know what I mean? Because
If
if you
that
get
if
if you get like $1,500 or $2,000 in Social Security every month, and it is low, y'all. Like,
Yeah,
it is not a lot of money. Like,
and you can go online to find out how much you're going to get.
yep,
Yeah, you
it
can go
is
online.
not a lot
It's
of
not a lot,
money.
especially if you take it at 62. Like right when you're eligible at 62, it's not that much money. If
Yep,
you wait
yep,
till 67 or 70, you might be able to stretch it to maybe like 3 grand a year. I mean, 30,000, I mean, 3 grand per month.
yep,
Because I looked
yep.
at mine and I'm probably getting, I think there was like 3,100 at age 70. And just think about it, if that's my only source of income and I still live
Nah,
here in California,
nah.
I'm
Man,
about to turn into Frank Lucas and start selling drugs.
I'm telling you, man, to go get that opioid from somewhere.
Yeah,
But at the same time, it's like you still got to think about it too. It's like, if you don't have any other income coming from anywhere else, and you only solely depending on Social Security,
correct.
what
Correct.
about your health? If
Yep.
something happened with your health, you know what I mean? Yeah, granted, you can get Medicare and Medicaid, but we are in the time right now we talk about Medicare and Medicaid and all the stuff that's happening in there. It's like, even us talking about Social Security for people our age, I don't know if that money is going to be there. because you guys got to think about it. Right now, when you contribute to Social Security, you're not contributing to your money. You're
Yeah, you're
contributing to the
contributing for people that are
generation.
receiving it.
You're
Yeah.
right. People are getting
You're paying for the people that are receiving checks right now.
right. And the way Gen Zs are acting up, I asses are not getting nothing.
Another thing you got to also understand is like the Social Security fund, they don't invest in the stock market. They
Nope.
invest in fixed income. And fixed
Yep.
income rates, they just went up, what, 5 years ago?
Mm-hmm.
So all the interest, and you can actually go see how the Social Security fund has been invested. And if you go look at some of like the pockets of their investments, there's some of those pockets of money that are earning like 1%.
Yep. Right.
Like, and that's not doing nothing for nobody. So I probably could see them increasing how much they pull out of people's checks just to make sure that things get funded because they're basically using borrowed money to fund Social Security.
Yep.
And I keep trying to tell them they need to open up the window, let Pelosi manage the Social
Let
Security
police
fund.
do it.
We're
Let
gonna be
before
good if we let her do it. She
we
don't
would have
miss.
had billions and billions and trillions of dollars in there right now. You know what I mean?
Exactly. So
That's
when you
crazy.
think again, and I get that other people, right? They have other they have other retirement goals, right? They say, you know, I'm going to use properties. You know, I want to invest in
Right.
properties. Here's the
Right.
thing about properties. That's not a bad plan, but also remember that your income when you have an investment property is dependent on whether it's occupied or not.
Yep.
And whether if you want to sell it, whether you can find a buyer or not.
Yep. Yep.
People say, I hear a lot of business owners like, oh, I'm gonna just sell my business. Okay, what if you can't find a buyer at
Yeah.
the
What's gonna
value that you
happen
think
now?
your business is?
Yep.
Right? So those are the things that you have to kind of couple together. So the best way to plan for that is putting away money in a place that you have a little bit more control.
Control over.
Because
Yeah.
if you invest in the stock market and you close your eyes for 40 years or 20 years, chances are, now when I say the stock market, I mean like the S&P 500, not individual stocks. I'm just talking
Yep.
about the general market. And you close your eyes and you say, I'm not going to do anything, the money's going to
The money's
grow,
gonna grow.
whether you like it or not.
Yep. Yep.
To me, that's a better plan to create a pool of money you can tap into and then turn into income when you retire, rather than betting on things that may or may not happen.
Right.
You know, is it good to have the investment property? I feel that nothing wrong with that if that's what you feel you want to do. But let's just say you get to that stage and you can't find an occupant. Now that property becomes a liability. Then you got to maybe potentially have to dump the property and find a buyer.
Find
All
something
of those
else.
things are things you have to think about when you get to that
Yep.
stage.
Yep.
The stock market, there are buyers and sellers every single day from 6:30 a.m. to 1 p.m. You'll find
Yep.
one.
Yep. Yep.
So,
But that was a nice breakdown, man. So
yeah.
financial fighters will be coming back next week.
Yep.
And if you guys have any topics you want us to cover, please, let us know and we will to kind of put it on the list.
And it can be very simple. Like, how do you
Right.
create a budget? Like,
Yep.
I don't care what the topic is. I'm gonna take a poll. I'm gonna get people's ideas, and then I'm just gonna draw them out of the hat. And I think for next week, Wednesday, the stock that we're going to be looking over is Airbnb. So I
Yes.
pulled a random stock from the list of things that people gave me, and Airbnb came up.
That
So we'll
should be
be
a good
doing an
one.
yeah, we'll be doing an analysis of Airbnb next week.
That should be a good one. That should be a good one right there. But yeah, next week there's not a lot of stuff happening. We have CPI coming in
And
next week,
PPI, yeah,
but
that's it.
and PPI, but we don't have a lot of big things happening next week. So it might be a quiet week unless Trump decides to say some stuff and ruffle some feathers. We might not see a lot of move next week. The one thing that people kind of watching next week is this U.S. China trade truce deadline. I think it's next week, so we'll see what happens with that one.
They're gonna
And
keep
then
kicking that deadline out.
and then we have earnings from Cisco, John Deere, Applied Materials to kind of keep an eye on. And we also have earnings from Ford, I think Google, Tencent, CoreWeave. Oh, wow. I didn't know CoreWeave is
Oh,
reporting next week.
CoreWeave's first earnings
Yeah.
report. Okay.
So midweek next week. So that is going to be interesting to keep an eye on.
I'm actually
Um,
surprised no one, when I asked what stocks people wanted me to analyze, I'm surprised nobody said
Nobody
CoreWeave.
saw CoreWeave. We
Nobody
should
said
add that to the
CoreWeave.
list.
Yeah. I think
But
I've got SoFi, Airbnb, Campbell's Soup, Costco, and Soundhound.
no, we should add definitely add CoreWeave now. And then we have Walmart also reporting, Tapestry, Ab11, Lumen, and then Brinker International. So we have some
I
retail
thought
ones
I
reporting next
thought
week.
Apple already reported this week.
They did. Let me
Yeah,
see.
they reported this week already, and that stock went
Oh,
kaboom.
yep. Never mind. Yep, it was this week.
Yeah, they went kaboom. Yeah, that stock was up 4% today.
Yep.
And the crazy thing is, after they reported, there was an initial drop, and that dip got bought fast.
That's crazy, man. That was an interesting stock coming into this year. Anyway, if you look
It
at how they
was,
ran up like crazy,
yeah.
like that was a very interesting stock.
And
Okay,
if
let
I'm
me.
not mistaken, that's another software company.
Yep. Oh, wow, they've been consolidating for a long time.
Yeah,
That's nuts.
they're trying
But
to hit
yeah,
that high of 525. They're coming for it.
yep. Yep. But other than that, man, I think that's all we have for this Friday Wall Street rundown. Any advice going to next week at all that you want to give to the people?
So I think I posted something yesterday. If you're a trader, even an investor, to be honest with you, um, you know, I invested. This was back in maybe 2016. No, maybe 2015, 2016. I
Mm-hmm.
invested in a company that I thought was going to get bailed out from bankruptcies. I think it was Sunrun, and
Mm.
Sunrun thought that they're going to get bailed out, and I was buying a bunch of their stock. They went bankrupt, lost everything.
Sunrun did.
I think it was Sunrun. I forget. Was it Sunrun? No, it wasn't
No,
Sunrun.
Sunrun is still. I was gonna say, man. I think Sunrun is still around.
Solar City.
Solar City.
Solar City. I was investing in them because I heard that they were going to get a bailout. They
Mm.
never got that bailout. It was
Never
speculative
happened.
investment. Lost all my money.
Never happened.
Um, and that was a mistake. But I would say do not allow investment or trading mistakes to paralyze you from improving.
Yep. Yep.
Take them as lessons. What did you do wrong? What could you have done better? My thing was I made a mistake of investing too much money into something that was speculative. There was really
Mm.
no foundation or basis behind whether or not they were going to get bailed out. It was just hearsay. And that's what made me invest. And I learned my lesson that if you're going to invest into something speculative, invest money you can afford to
You can
lose.
afford to lose.
It's not gonna make a huge dent in your lifestyle.
Yep.
Same thing with trading, right? Same with you doing a speculative trade. It's the same thing. But when you make these mistakes, don't let it paralyze you from improving and getting better. Even for the good and the good stocks or the good investments that you make, there are also lessons. You
Yep.
know, exactly. Like when I look at Oklo, right? What made me invest into Oklo in a company that has no revenue that had just went public via SPAC was actually doing my due diligence behind where this company was what problem were they trying to solve,
Right.
and looking at whether or not that made sense in this market environment. And when I
Okay.
saw that there would be a need for power and data center power moving into this whole AI, you know, um, saga or whatever,
Mm.
that's what made me do my investment. When I look at my investment in Sunrun, I didn't really do a lot of research per se.
Mm.
It was kind of like got a feeling, or I heard this,
Yep. Yep. Yep.
lesson learned. So if you're a trader, investor, just because you make a mistake or something doesn't go your way, don't allow that to paralyze you to throw in the towel. Look at what you did wrong, analyze it, write it down. If you got to keep a journal, and then move on to the next thing. And if
Man.
you need help, there's a community of people that have done it for a long time, like myself and a lot of people in our group that can help you with better decision making. Because,
Yep.
like I said, I've been doing this now since 2009. So a lot of the stuff that I talk about is not because I just kind of read some book or some YouTube channel.
Right. You
I've
actually
seen,
went through it.
I've went through it and I've
Mm-hmm.
seen people go through it. I've helped people
Mm-hmm.
go through it.
Mm-hmm.
So, that's just somebody actually sent me a message. A friend of mine I went to college with, and she's now in Jersey, and she said, I have you to thank for helping me with my investment journey.
Facts. That's
And this is
nice.
stuff that we talked about back in like 2010, 2011. So,
That's nice.
yeah. So there's no lack of knowledge anymore. The
Yep.
resources are there, just a
Yep.
matter of whether you take advantage of it or not. So,
Facts. Facts. With that being said, that's a wrap, yeah, for today's episode. Just remember, stay informed, man. Like the stock market's not going anywhere. Stay informed, study. Like I literally took the past couple of weeks, I didn't take a single trade and I was okay with it. You know what I mean? You have to get to the point where it's like, hey, you got to stay informed and you got to be able to control your emotions a little bit too. So it's like, it's okay. You don't have to be in the stock market every single day. Like,
Yeah, you don't have to
you know,
trade. You don't have to trade. You don't have to trade every day, right? Like I tell
you
people that all the
don't.
time. You don't have to. Sometimes you got to take a break.
Yep, yep. We all
Sometimes you
need
got to.
that. And it gives you a good edge too. Take that mental break, take your eyes off the chart, you come back and you see opportunities that you would never be able to see. Like it
Yeah,
just opens up, it
that's the
refreshes
part
your
I
brain a
need
little
to
bit.
work on more. Is I need to learn how to like shut it off.
Yeah,
Like
yeah,
I can't. Sometimes I can't shut it off.
yeah.
I need to work on that from time to time. So,
It is, it is, it is, it is, it works magic for your brains, man. Because you come back and you look at charts like, whoa, I didn't see that before. And then you start making out your list, So, but
yeah.
anyways, with that being said, y'all, we'll see you guys next Wednesday. And yeah, if you guys please share us on share, subscribe, leave us a reviews, follow us on social media, and please join the group. If you're not already in the group, join the group. We're doing a lot of great stuff in there. But with that being said, you have a good weekend. Stay safe out there.
Yeah. If you were
And
in a group this week,
you made some good money. You made some good money.
somebody sent me their month performance for the month. I got another one so far in the last month.
Mhm.
500%.
That's the whole. That's the whole portfolio, not just like a position.
No, that's 500% for the month.
Mhm.
We're doing great things over there. Don't miss out.
Yes. Yep. Don't miss out. With that being said, it's a wrap. Yeah. Have a good night. We'll see you guys on Wednesday.
See you
Peace.
Wednesday.